But the caution was basically just don't just put anything you don't understand what it is into the category of office supply or office expense. Actually go back and ask your client what this thing is and put it in the right place. So apparently New York State was seeing a lot of accountants just dump stuff into that category in the Schedule C. So New York was going through and making a practice of auditing tax returns where that had happened to see if there was stuff in that category that didn't belong there, and maybe that shouldn't be on the tax return at all. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello. Today, I am super excited to bring you a little bit of detail about your tax deductions. Over the years, I have come to learn quite a lot about specifics in the categories inside your Schedule C deductions. And some of them are pretty interesting and kind of give you some of the strategy behind what to stress over and what not to stress over when it comes to taking your deductions for your self-employment or your small business. All right, so let's just jump right in. When it comes to the Schedule C, there are basically a whole bunch of different categories of deductions. And essentially, your goal is to document those deductions all through the year in the way that the IRS requires. But your tax return is only going to have the totals in each category. Okay, so the IRS can go back and they could ask you to show them more detail on anything in any of those categories, at which point you would want to show the bookkeeping that showed everything inside, for example, your supplies expense or your travel expense. But on the tax return itself, think of it more like the Cliff Notes, whereas your bookkeeping, where you have every transaction, is War and Peace itself. It's the whole novel. So the IRS can come and audit you and ask to read a chapter, and you will have to provide the chapter. And here in my analogy, the chapter is your receipts, possibly your bank statement, and maybe some of your bookkeeping. So today I want to talk to you about a few key interesting areas when it comes to these deductions. And give you a little extra guidance at the end. All right. So the first category I want to talk about is advertising. Now, advertising is one of the what I call golden categories. And the reason for that is that advertising itself is proof that you are operating a business and not a hobby. So hobbyists in general don't advertise. And one of the key tricky issues that a lot of creative people face, especially in the fine arts or in maybe performance, is that a lot of times if you're running a creative business, it actually might really struggle to turn a profit, even though you really genuinely are trying to make a business out of it and genuinely have a profit motive. So advertising, a lot of people don't realize this, but advertising is actually the signal of your profit motive. And the IRS definition of when your business begins is actually, if you can believe this, the moment you first advertise. Because if you think of it spiritually, advertising is your signal to the world that you're open for business, right? That whatever you have for sale, products, services, etc., is available, right? So advertising is a beneficial category. It is a category that actually sort of is a positive for you. And so in general, strategically, when I am doing a tax return, there can be some ambiguity at times about whether you put something in one category versus another. I honestly think that people stress about that a little too much. But I will say that if there's ever ambiguity about if something is in one of two categories and one of the categories could legitimately be advertising, I put it in advertising. So for example, your website or your website hosting fees That's an advertising expense because your website is a key piece of advertising. So I don't put that in office supplies or some other part of the tax return. I always pull that one out and put it into advertising, especially if a person is kind of struggling to make enough profit to stay on the good side of that hobby loss rule, where the IRS presumes that you have a business and not a hobby. I'm always trying to, bulk up the category where that really is proof of running a business. All right. It's a subtlety, but I thought I would share it. There are two expenses on the tax return on the Schedule C that can tend to be a dumping ground. This can happen with lazy accountants. I see it all the time. And I say that because, when a tax preparer, when someone does your taxes, they see the work of the last person who did your taxes. Like that's one of the deals. So I always am seeing other tax preparers work whenever a client comes to me with last year's tax return, right? So I see it all the time that accountants, sometimes clients, but actually more often busy accountants who are just trying to run through a lot of tax returns really quickly, that they just will dump stuff in certain categories. And these two sort of typical dumping ground categories are office expenses and other expenses. Now, office expenses, it's actually attracted a little bit of scrutiny under the law for this reason. So I know New York State, it was a while ago, but when I did some continuing education with the state of New York, back when I lived there and was first training up in taxes, and New York had actually passed some laws around the office expense category. I don't actually even remember what they are at this point, but the caution was basically just don't just put anything you don't understand what it is into the category of office supply or office expense. Actually go back and ask your client what this thing is and put it in the right place. So apparently New York State was seeing a lot of accountants just dump stuff into that category in the Schedule C. So New York was going through and making a practice of auditing tax returns where that had happened to see if there was stuff in that category that didn't belong there, and maybe that shouldn't be on the tax return at all. Now, a related but slightly different category is called other expenses. And I have something kind of interesting to share with you about the other expense category on the Schedule C. So other expenses is sort of a catch-all category that comes at the end of the rest of your Schedule C deductions. And it's an unnamed category, and it's essentially for things that don't fit in another place, right? So you might have deductible expenses that are perfectly legitimate, but there isn't a specific pulled out category where those would fit into. Some things that I often put on the line, other expenses, are research expenses, education expenses, professional development expenses. And occasionally, if it's a large line item that is too big to go and fit into office supplies, I will put postage expenses there as well. That typically will be for example, an artist who's shipping work, because as you know, if you're an artist, especially like a sculptor or someone making large works, you know that shipping expense can start to get gigantic and be quite a bit more expensive than, an office that is just, dealing in paper and might be sending envelopes through the mail. You are sending crates, right? With massive amounts of insurance. So that's quite a different category of expense. So interestingly, I heard this interesting thing that the IRS computers actually cannot see exactly what is in the other expense category. The computer itself is only scanning what the total number is on office expense. But if that number is out of line, if it's really, really high, especially really, really high with a lot of blanks on the other parts of the Schedule C, then sometimes the IRS will turn around and ask the client, ask the taxpayer to show them what is in that category. So in other words, they cannot actually see on your tax return what's in your other expense categories. And so sometimes strategically, you don't want to use the other expense category as a dumping ground and just put a ton of stuff there, because if that line item gets too out of proportion to the rest of the stuff in your Schedule C deductions, you might get an audit simply because the IRS can't see what's in there and they want to ask you. Okay. So that is just a very sort of insider tip about something maybe to try to avoid on your Schedule C. In general, you want to do the best job that you can, putting your expenses in the proper category where they belong and being specific. Now, you don't need to have 50 line items on the other expense category, and please don't. But, everything that is a professional development expense, you can put together as one line item. Everything that's a postage expense, you can put together as one line item. Please don't pull each of them out individually. That will just be a headache for everyone involved, and it's unnecessary work. All right. Now, I want to tell you one last kind of key interesting thing about how tax returns get flagged for audit. So on your Schedule C, there is a code at the top called a NIAX code. Can't remember exactly what that stands for, North American something. It's basically an industry code. And it basically identifies what field you're in. Now, these are fairly broad. I mean, my painting practice has the NIAX code, independent artists, writers, and performers. And, that's a huge, every performer in the United States, every writer in the United States, every artist in the United States are all in that category. So it's a big category, right? It's quite broad. But what happens is, you identify with the NIAX code what field you are in. And if you think about it, the IRS has all the data, right? They have all the data from every single tax return, every single Schedule C across the entire US taxpaying population. And so they run what is called a diff score. It's a differential. So they basically determine what a reasonable range is for each NIAX code, each industry, right? So they know for every single category on your Schedule C, they know what a sort of low and high range are for that category. They know, if you are a real estate agent in Tampa, Florida, they know the range of travel expenses or client meals expenses that is within a normal limit, right? And these are actually something that you can look up online. You can actually look up those ranges, which is fascinating reading. But essentially, the way that flags happen on a tax return is if your expenses in a category fall outside the range, meaning above the range, right? If you have way more client meals expense than a typical person with your income level in your NIAX code, well, my friend, you will likely get a flag put on your tax return. Now, not every tax return that is flagged will be audited, but all of the audits come from the flags. Okay. So having extremely outsized expenses in a single category are a really good way to get audited. Now, something that I often end up having conversations with clients is there are times where you might really have expenses in a certain category that are extremely high because of the nature of the work you do, right? So you might legitimately be on the way, way high range of that expense in your area, in your field, right? To give an example, a ceramic artist running high fire kilns, right, is going to have a massive utility bill, right? It takes, if you're going to run kilns that go up many, many thousands of degrees to melt glazes and, turn turn powder into glass, you're going to have a really big electricity bill, right? So your utilities expense on your tax return is just going to be on the way high end of the range compared to other people in that category. Now, of course, the moment you say to somebody, if the IRS were to audit that category and you were to have to prove it, you would just show them like, hey, I'm a potter. I run kilns. Here's my utility bill. You just show them. And then you show them your work. Like, it's obvious that that is true, right? It's obvious that that is real and it is a necessary expense of your work. You can't not fire your pottery, right? You have to do it. So that would be an example of a completely reasonable way to be way above the range. What I recommend, if you know that you've got something that's a little unusual in your practice, and I say this because I like to think of myself as the expert in weirdos, and I say that with a lot of love, is just document it really well. You just want to be extra safe and extra buttoned up when you are incurring expenses that are kind of larger than life for people in a similar position to you, because the chances are just a little higher that the IRS may someday come turn around and ask you to prove those expenses. The good news is an audit is a checkup, not an accusation. And so if you show them the documentation that you need to, which is usually a receipt, but sometimes a little more, you'll be fine. You really will be fine. Okay. So, in that vein, I have a small offering that I wanted to share with you. And I got some feedback. I've been talking to people. I've really tried to focus my work into one thing and not offer too many different services and products and different things. Because honestly, it takes a lot of effort to kind of tell people what you have available and differentiate one from the other. So in general, I have only had my program, Money Bootcamp, and I basically put everything. I put all my energy into Money Bootcamp. And anytime I develop a new course or tool, I just put it into Money Bootcamp. So everyone who's already there gets to benefit, and all the new clients, it's enticing to join. But I've gotten a little feedback lately because of, I don't know if it's because of the economic jitters or the presidential election, people feeling a little more nervous about money these days, but that a lot of people are not able to make the commitment of my full program, but they want to be able to do something. They want to be able to have some of this education, get a quick win. And so I decided to pull one of the modules that is a good standalone module. It's not dependent on a bunch of the other learning inside Money Bootcamp, and just pull it out and make it available for you if you're interested in trying some of the courses that are inside Money Bootcamp. So I've made available my course, which is called Get Every Deduction, Your Business Deductions Deep Dive. And it is a 1-hour course it's going to help you save extra money on taxes by never missing a deduction, by knowing how to capture all of the tricky deductions, like client meals, like travel, like mileage, home studio, home office. And it will also help you get all of your documentation tidy, organized, and IRS proof, especially for those scenarios where you have, for example, a ginormous utility bill. And you know that it's something that could come under scrutiny, and you want to be sure that you are documenting it exactly right and you've got everything you needed so that you feel totally confident taking a really big expense that is genuine, but knowing you've got the proof to back it up if it's ever audited. All right. So this is a 1-hour course. It's a 1-hour video. It's got a very robust outline. The video follows the outline very closely, but everything's written down for you for scanning. And it's got also a little bonus article about keeping receipts that I wrote as well. So it's a great little course. It's just a little nugget, and it's everything you need to know about your business tax deductions in just 1 hour. So if you're interested in trying a bite-sized version of what's inside Money Bootcamp for this one key issue of getting every single deduction, you can try it out. It's $97, and it is available at least for the next few weeks while you are getting those last bits of taxes organized, or if you are setting up for next year because you have already gotten your taxes done. So you can get it at sunlighttax.com/deductions. Don't mistype that, because deductions guide is where you get my free guide, my free visual guide to your tax deductions. But this is a shorter URL, sunlighttax.com/deductions. And that's where you can get this course. You can just join and have a one quick win, know you're getting every single deduction, save a bunch of money because you don't miss any that you are entitled to. So I hope that that's helpful. I wanted to just show you that I heard your feedback and I'm listening. And I hope that this offering helps you have a way to have a really awesome win on something you know you need. And if you decide that you like it, I have a coupon available inside the program, inside that course, for $97 off of Money Bootcamp. So if you do decide you ever want to, within a couple months, if you decide that you'd like to join Bootcamp, effectively, you will get the cost of this course as a discount on Money Bootcamp. It's not an additional expense. It kind of takes the risk out of trying it. All right, so I hope that's helpful to you. If you want that, definitely grab it. The link is in the show notes. You can get it at sunlighttax.com/deductions and go out there with confidence and get every deduction that you need. I hope this little bit of inside baseball on tax deductions was really useful to you and maybe even kind of interesting. All right, I'll see you on the next one. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.